Hello, this is Pat Walker at MissionWinners.com, and this is a video for Cristian. And I hope I'm pronouncing your name right. I'm not trying to be rude; that would be wrong. But I'm reading this, and first off, welcome to the club. I'm glad you're the first. You are the first person I think that we have had from Chile, so I'm excited about this. There's a great quote that I love: "Strangers are friends you haven't met yet." And so I'm looking forward to getting to know you better. And I'm not saying that because you're a VIP. No. Just it's exciting to meet people from all over the world. It's wonderful. So welcome to the team. I'm glad you're here. And I am going to go through here slowly so that we can have a good conversation about it. First point, I am really glad you have studied How to Make Money in Stocks and Mark Minervini's books. Excellent. Study them. Study the charts. I cannot stress that enough. Marketsmith is a wonderful tool. I was in the beta test group for the development of that product. It has helped me through the years. In fact, the original product called Daily Graphs Online came out in the late 90s. And I absolutely love it. I couldn't do it without it. Cristian, you said something very important. You have a full-time job. That's excellent. Given that, I have one recommendation now. Please, only focus on longer base breakouts, multi-week, clean and simple base breakouts. It does not have to be a cup and handle formation. It can be a clean and simple flat base formation. An example, this was one we did last year. You could say it's kind of a cup and a handle formation, but you can see the break right here on volume. That is a good one. Another one to show you. Coop last year. I can't really call this a cup and a handle, but it's a nice base, longer base, with a clean and simple entry and volume. So let's address the first point. You, as you stated, have a full-time job. Given that, I encourage you, only focus on the longer base breakouts. No swing trading, no pullbacks to a rising moving average. Longer base breakouts. It does not need to be a cup and a handle. But this is very simple. I'll show you something. This is what we were looking at before it broke out. And you can say, well, if it goes above this line right here, it's good. Notice the volume picked up on this day and this day. And then you get the trigger day with a buy stop right there. So, point one, focus on longer bases. It does not need to be a cup and handle. I cannot stress that enough. Secondly, let's go through pyramiding. I'm reading your letter as I go through this. And by the way, stop loss at 8%. I would encourage you, if it is a longer base breakout, you can keep your loss ratio stop much smaller than 8%. I would take it down to 4%, 5% maximum. And as soon as you are profitable, let's suppose you bought this stock and it moved up. On this day, near the close, put your sell stop at your cost. That way, you can't lose. If it continues going up, raise your stop a little bit. Not too high, but maybe if you had your stop at $70.10, after this day, raise it up to $72. And continue raising it up. After it's made this move, raise your stop to the lows of this bar. If we look closely, the lows of this bar also is where the 8-day moving average is. That way you are guaranteeing yourself profits, and that is important. Also, I realize, as I stated, you have a career, which is wonderful. You can't be doing all kinds of crazy trades, and you shouldn't. Focus on longer, clean and simple bases. Your success rate will improve substantially. I'm glad you save your trades. It is so important to go back and study them. And I see you're doing that. Manage the trade and especially the exits. After a stock has made a good move, I would sell 20 to 25% of your stock. And you could say, why? To guarantee a profit. Even if the price comes all the way down to your cost, you made money. And then just let it walk up the moving average. In this case, the slope of this moving average is relatively steep. I would not put your sell stops real tight on this, but I would raise stops enough to know that you are going to make money. On a bar like this, you do not even need to watch it during the day. When you saw something like this, losing the 20-day, you could, if you wanted to, sell some more. Simple, very simple. I encourage that. I'm going through your letter. I think it is great that you study your trades. That's good. You pyramid the entries 50, 30, 20, and that is perfect. I would also say this. I like this that you are not being overly aggressive on how much you're putting in there. 1.5% of your account. Good. You're not risking too much on any one trade, and I am glad to hear that. Working on defining rules. I start with the 7 to 8% rule. Yes, I will tell you this, sir, if you are really precise in your entry, you can keep your losses much less than 5%. Bill O'Neill himself said he prefers to keep his losses less than 4 or 5%. You should strive for that also. It will keep you in the game. I will also say this, sir, do not look at 5-minute charts. I can tell you don't, and I compliment you on that. At this moment, my last exit is below the 50-day. Again, if a stock is working for you, you can use the 8-day, you can use the 20-day to sell some, and on your last shares, you could use the 50-day. Or in this instance, a support line. And when it gets really loose like this, you could raise your stop. I'm reading here slowly. Okay. I'm out of the where? Okay. I have previously set up the sell stop below the 50-day. So even a shakeout can close all the positions. Until now, and even if it sounds like a normal strategy, I am facing a lot of losses. Perhaps what we need to do is look at the stocks you're buying. Are they really good market leaders? And I think that's where the key list will help you. Those companies are great companies, fundamentally and technically. I would stick with those. And once a stock has pushed away from your price, I would raise your stop up to break even, if not just a little bit above your cost. So the worst case scenario is you cannot lose. I would not want 7 and 8% losses. I would want less than that. I'm reading your letter further, slowly. I do like this, that at this moment, my last exit is below the 50-day. If you sell some into strength, 20% or 25%, 20% in one lot, 20% again, raise your stop up. After you are up, like in this example, raise your stop up enough that even if it drops, you cannot lose on your last shares. Never let a 10 or 20% profit turn into a loss. Don't do it. I'm reading further in your letter. Yes, selling some into strength, as you stated. What rules have you defined over many years of experience? I will share this with you. In 2008, they eliminated the uptick rule on those stocks in the U.S. markets. What happened? Hold on one second.